This is a topic that was not on our agenda for today, but there was a news article about someone from Meta being like, don't think 5% faster, think 5 times faster. And 404 Media wrote a whole article on how delusional that was, that you could just use AI to go 5 times faster. And again,
Yeah.
2 points on that. One, I do actually think that many teams at big tech companies could move 5 times faster, unrelated to AI, just because they have terrible agile methodology that
Yeah.
requires 57 approvals. And how you write the code is not the constraining speed factor on it.
Yeah.
And B, I do actually think you, by which I mean specifically me, can move 5x faster using AI coding tools. A person, that person being me, and presumably some other people, can build things 5 times faster using AI coding tools.
Right, but that's not
every
everybody
person.
Yet. Yeah.
Hello and welcome to the Fast and Broken podcast, where we take a critical look at the fast-moving world of tech and online culture. I'm Carly Rector, a software engineer and startup founder who gazed into the world of finance, but while I was running my startup, and now has a lot of opinions on it.
And I'm Teresa Kramer. I'm a semi-professional voice actor, MBA student, and project manager who has been spending a lot of time in finance right now because I actually have accounting classes and economics classes and things like that I'm taking. So deeply mired in the spreadsheets that are finance.
Yep. Which is relevant because this is basically like the economic policy episode of this podcast, which doesn't sound super thrilling, but I think it'll be interesting stuff.
Yeah.
So our 3 segments for today. First, we're going to just do OpenAI again because there was too many things that were follow-ups to last week to not talk about OpenAI a little bit, but we're going to try and keep that relatively brief this week. And then Anthropic posted a research blog post that is a summary of some of the policies that were proposed at their economic policy symposium, general economic policies to address changes in the labor force in AI and different approaches to it that I thought was interesting. And we can go through some of that. And then I wanted to talk about private versus public companies / markets, and just do a primer overview there, and then also talk about some of the discussions that are going on there, because that's another one where it's I don't think the general public thinks about what's going on there a lot, but I do think there are things going on there that are really important. So hopefully we can make it approachable and interesting.
Yes, hopefully.
Cool. Let's jump into OpenAI. Quickly do some updates. So one of them is this first article we have here. We talked about Japan and their strict copyright restrictions.
Yeah.
We saw it last week. There's an article from The Verge here that says the minister of Japan, who's leading intellectual property strategy, chastised OpenAI for copyright infringement. So that was directly Japan saying, guys, no. In case we needed more people saying, guys, no.
I mean, it's kind of like we told you.
Yeah.
So that's the statement we have on that one. Japan's copyright laws are much more stringent than America's copyright laws. And of course they would come after this kind of stuff because they care very, very deeply about it. And yeah, I think it is very interesting, funny, but also very salient that this guy is no, manga and anime are irreplaceable treasures of Japan. It's and I'm you're not wrong, and that's the correct way to say it, but it's also very funny to just think of that coming from a government official's mouth. I feel it is also part of it, as somebody who lived in Japan, a Japanese appreciation of artistry and artwork for art's sake. It's I feel they have a very different appreciation of labor compared to America. There's people in Japan who are designated as national treasures because they know a certain craft or a certain way of doing something, that it's we want to preserve this cultural heritage piece. And so it's of course Japan would be stop it.
So not unexpected, but another one to add to the pile, especially now that a bunch of high profile people have made statements against it. I think there's people can come out more strongly.
I think it's also very nice that it's the Japanese government saying something, because as we kind of discussed, this is the place where American government probably isn't really going to do anything for in the next 3 years at least like
Yeah.
governments are noticing, and so that's the kind of thing where it's like that's probably a little bit more of a stick, if you will, to try and get them to behave.
Yeah. Although speaking government, let's
Mhm.
skip to this other one that is government related, which is
Yes.
recent bills passed by California. So
Yeah.
California is a government that is trying to do a bunch of stuff with regulating AI, and they passed a whole bunch of bills on that lately. They created a policy where you have to keep track of users who are expressing like self harm
Mm,
desires. A, direct them to resources. B,
yeah.
report to the state of California what those resources are and like how you're detecting things and how often you're directing them
Mhm.
to it. And then that data will be published as of 2027. So there will
Mm,
be some statistics on that eventually that the
yeah.
AI companies are forced to report. So that's an
Yeah.
interesting one.
That is an
Um,
interesting one, and definitely I feel like that one's kind of coming out of the was this a kid in California? I cannot remember where the child was located, but, like, the child was, like, having conversations with a chatbot, and the chatbot was pretty much just like, "No, don't tell your parents that you're having suicidal
yeah,
ideation, like, please hide your suicide plans from the people who love and care about you," and the kid
yes.
eventually did commit suicide, and it was very tragic, and so, yeah, I see this as, like, kind of a reactionary legislation to
Yeah, and
that specifically, so
for sure, yeah.
Mhm.
And I think that's good. And they have a bunch of other stuff, which
Mhm.
I don't want to go in depth because we could talk about them for a long time. But that also does lead to the other OpenAI one, which is like OpenAI did a few weeks ago now
Mhm,
introduce guardrails for minors,
mhm,
more mental health guardrails where it's like they can't have certain conversations with minors, and there are more of that like detection of self harm intent and things like
mhm,
that.
mhm.
So they implemented some of those guardrails a while ago, which is good, and
Yeah.
like I think mostly would meet the criteria of this law ahead of time. But then, but then there's this tweet from Sam Altman. This tweet from Sam Altman from this past week that was basically, well, now that we've solved the mental health problem with ChatGPT, we can move on to treating our users like adults more. And it's like, you've solved it. Like that's a statement to make. Like
Sure
people
is.
definitely commit
Mhm.
suicide, and you introduced some guardrails 3 weeks ago, and you're
You like,
calling the problem solved now.
yeah, that's not even enough time to, like, actually determine if your guardrails have made an impact. Like, hello, my dude? Like, that's yeah, that's moving way too fast, and,
Uh-huh, and
it's,
perhaps
like,
breaking
breaking
some
too many
things,
things.
yes.
Yeah, yeah, exactly, exactly. No, gosh, like,
Yeah, so like the specific quote that he wrote in this tweet or X post or whatever was, now that we have been able to mitigate the serious mental health issues and have new tools, we are going to be able to safely relax the restrictions in most cases.
hmm.
And then to some other stuff that we've talked about before, as part of our treat adult users like adults principle, we will allow even more like erotica for verified adults. So I know I said in one of our early
Yep,
episodes
yep,
that I
yep,
wasn't
yep.
sure that that OpenAI was going to do the romantic chatbot thing, and here we go.
Yep, yeah, no, I called it. That's the slippery slope. I mean, everybody else is doing it. They're gonna hop on it at some point in time. Oh, it's embarrassing though. I wish it wasn't true. I wish I was not correct about this thing. So,
Yeah,
ugh.
there was another
Mm.
quote where like they were calling out them for like doing ads and porn, and the OpenAI spokesperson was like, we're not doing pornography, no." And then they were like, "Well, it depends what you mean by pornography." So like,
Yeah, yeah. It's like, but my guy, pornography has been historically a very fraught term to define. It's like, I'm pretty
uh-huh,
sure what you are
yeah.
doing is, in fact, by some definitions, considered pornographic.
Yes,
So,
well, and I'm sure the reason that Sam Altman used the word erotica is that he didn't want to say pornography, and like what they're doing is just like sexual role play chatbot stuff, and not, for
yeah,
example, deep fake video
deep fake.
porn, which they
Yeah,
could also do, but
yeah.
are still avoiding, which is good to
Hmm.
the extent that that goes.
It still feels like a slippery slope, though. Like that really feels like the definition of a slippery slope. And I'm like, is this going to scare investors away? Because I don't think that it's going to scare investors away, at least not right now. And so it's like this very bizarro double standard that takes place when it comes to things that are like, you know, on that realm of like erotica,
Yeah,
adult themes, what have you. Because it's like, oh, okay, so you're basically saying it's like the small developers can't do this. You're not allowed to do that. You're not allowed to make money off of it. But Sam Altman, absolutely fine. Excuse me.
Yeah, like there's that class issue. I also saw what I thought was a really interesting take on the gender aspects of it, which is there's a lot of looking down on female sex workers for doing things like
Yeah.
sexual chat RP, and like those people definitely shouldn't be making money off of that because they're like dirty women or whatever. But if a chatbot does it, it's fine. If a chatbot does it and makes like a tech bro billionaire rich off of it, then that's perfectly savory.
Yeah,
that's interesting.
Yeah, it is a very, very interesting social commentary on like who is allowed to make the pornographic content. And it's very interesting that it's like, no, not sex workers, but Sam Altman can do it, and that's totally okay by us. And it's like, excuse me. Oh, it's so telling. It's like you're saying the quiet part out loud, basically. It's just like, no, we don't want, it's like, we don't want sex work to have dignity. It's like, nope, this is just for rich people. And it's like, okay, like, it's so frustrating. It's so very frustrating.
Yeah, extremely frustrating. And again, back to like OpenAI's AI for the good of humanity or whatever. I don't think anyone is out here arguing that like allowing people to do sexual role play with a chatbot is improving humanity.
No.
In fact, many people would argue pretty strongly the opposite.
Yeah, pretty strongly. Yeah. It's like, hello, God. It's like, it's a very different thing if you are having like, sexual role play with another human being. That's a very different thing than just being like, I'm going to talk to a machine for my emotional sexual gratification and not interact with another human being at all. It's like, it's like that's the future you want. Okay, I feel like this tells me way more than I ever wanted to know about you. It's like, it's so gross. It's so
yeah, that was wild tweet from Sam Altman. Another in a series of such things. Segue. The next one on this list is called OpenAI has a business plan.
Do they now? I'm excited to hear what that is.
Yes. So we don't have specifics on what the business plan is, but they are at least talking about the fact that they need and are forming one.
Yes. Like this late in the game, you are not forming your business plan when you start your business. Like,
so since you say that, we'll also bring this other quote that we're up first from 2019, which Matt Levine had the money stuff article from this week talking about this, which is Sam Altman interview from 2019, in which he explained OpenAI's revenue model. Sam Altman quote, "The honest answer is we have no idea. We have never made any revenue. We have no current plans to make revenue. We have no idea how we may one day generate revenue. We have made a soft promise to investors that once we have built this sort of generally intelligent system, basically, well, we will ask it to figure out a way to generate an investment return for you."
Oh my God.
Audience laughter. It sounds like an episode of Silicon Valley. It really does. I get it. You can laugh. It's all right. But it is what I actually believe is going to happen. So that was 2019 Sam Altman.
Good Lord. And people believe him.
Yeah, people believe him, like, because he's like the Y Combinator visionary or whatever. So like,
God,
everything is built on hype. You don't understand. Anyway, so the more current article was from the Financial Times that says that they're trying to figure out how to make money, and they say OpenAI is planning on deals to serve governments and businesses with more bespoke products, creating more income from new shopping tools and new sales from its video creation service Sora and AI agents, said multiple people familiar with the startup's efforts. It is also weighing ways to cash in on its intellectual property by developing new AI infrastructure, making forays into online advertising, and plans to launch consumer hardware products, including a new AI-powered personal assistant device. So I think some of the more interesting parts of that are like the online advertising, sales and Sora, shopping tools. And then the other big news from this week is they announced a partnership with Walmart, among other things, to be able to buy Walmart products directly within ChatGPT, which they've also had similar ones with Shopify slash.
And that's just
Stripe,
like the Expedia thing we were talking about the other week, where it's just like,
but this is one where like their payment systems are integrated directly, such that you can like have a buy button in OpenAI. So
which is like, I don't know. It's again, what is AI doing there? Like you can speak to this. You didn't need to spend this much money just to get a recommendation engine for you to buy products. Like what?
Yep. Yeah, people have done that.
Yeah,
yeah, a lot
people
of
have
it,
done that.
I've done that. I worked at Amazon recommendations for quite a while. But yeah, I think a lot
Mhm.
of this is interesting. And I saw like a quote from someone at Thinking Machines Lab, which is Mira Murati's one also, that it's like, we
Mhm.
want it to be more like voice chat enabled. And a lot of it is just like Alexa again. And
Yeah.
having worked with the Alexa org, I was never in Alexa, but I was in Amazon devices and talked to people in Alexa. There was a lot of like, voice is going to be the interface of the future for
Mhm.
a long time. And it's just not. And I don't think
Yeah.
text chatbots are either. Like,
No.
it is an interesting interface in some cases, and we talked about this last week. There are some things that you just want to see in different formats,
Yeah.
and that chat is not going to be either voice or text chat is not the end all interface that they seem to think it is going to be.
It feels very like making him eat his words of, "Oh, we're going to ask the chatbot what makes us the most money." And it's just like, "Did you? Did you really?" Like, it does not seem to me like you asked the chatbot what would make you the most money. It seems to me like you basically just looked at the current economies of Google and Amazon and was like, "Where is their primary revenue
Yes.
source coming from?" It's like, that is not revolutionary, my guy.
Matt Levine has a good quote on this in his article also, which is, in a science fiction story, if you invented a super intelligent robot and asked it how to make money, it might come up with cool, never before seen ideas, or at least massive fun market manipulation. But in
Mhm.
real life, if you train a large language model on the internet and ask it how to make money, it will say advertising, affiliate shopping links, and porn. That's the lesson the internet teaches.
It's true. I feel like this is a very, very good example of artificial intelligence is not really intelligent right now. It's just parroting words back to you. So, whoops.
Yes, like it can
Yeah.
give you the distillation of things that people have learned on the internet, and that is
Mhm.
what the people have learned on the internet is like
Yeah.
advertising and affiliate shopping, and
And porn.
especially on porn.
Yeah.
Yes,
God. We're all the way back at Avenue Q now. I feel like we've regressed as a society. We're like, when did that musical come out?
do a new version of it that's just like chatbots are for porn.
Oh my god, yeah, seriously. 2003. There we go. It's
Wow. Yeah.
2003. We've regressed to 2003. Thanks, Sam Altman. I've been harping on this in this podcast probably too much, but it's like you don't have a business model. You've never had a business model, and at least you admitted to not having a business model, but it just makes it like utterly insane how so many people are willing to give you so much money when you do not have a business model. You have not at all proven to these people that they will make their money back, except for trust me, bro. And it's like, yeah, it's a cult
Yeah.
of personality. It's absolutely just
Yeah. Well, it's
insane.
personality and like the sci-fi vision of the AI future
Yeah.
that all of these people with
Yeah.
money hold in their heads. So it's like,
Yeah.
yeah.
They're so detached from reality. It's scary.
Anyway, I think
Anyway.
that's probably enough OpenAI. So the next topic is still in the AI world, but talking more about economic policy. So
Hmm.
I mentioned, I think at some point, that Anthropic has a sort of economic index and economic
Hmm.
advisory program that is basically like trying to track the impact that AI is having on the economy
Yeah.
first, as far as like the data that they can get takes them. And then also sort of like gather policy people and policy discussions around how to address the changes that AI are going to make to the economy, which
Hmm.
I am very happy with. I think a
Yeah.
lot more needs to be done here, but this is
Hmm.
more than literally anyone else is doing. So
Yeah, the bar's kind of on the
props for
floor, but
that.
yeah, like the bar's like just barely off the floor, but you stepped over it. Good job. you know.
Yeah. So they do have some interesting reports in their economic index, which I recommend people go look at if they're interested
Hmm.
in like how people are using Claude and what for what tasks in what sort of fields and how they're using it in terms of like delegating it or just like collaborating or
Hmm.
etc. So that's interesting. But this is from the more sort of like policy angle of their economic futures symposium that they
Yeah.
held, where they had like actually an in-person discussion where people came and talked about policy issues. So this is a research blog post that they posted that summarizes some of the approaches. They have 9 different proposals, which they have bucketed it into different tiers in terms of like how much AI is hurting the economy and how drastic measures that we need to take for it.
Yeah.
Starting out like with the ones that probably would just help even if AI is not really doing anything, and people have proposed these before. Moving
Hmm.
on to there's substantial amounts of job loss caused by AI, and then to ones where it's like dramatic job loss and dramatically worsening inequality and
Hmm.
requiring dramatic change scenarios. So probably we don't want to go through all 9 of these. There's a lot of stuff, and some of them are kind of detailed. But some of the ones that I thought were interesting. Number one here is invest in upskilling through workforce training grants. So this is a model that has been proposed before, which is directing public resources towards on-the-job training versus like requiring people to go to college for their work
Hmm.
training, and doing that by giving grants to employers, basically giving them grants if they create a formal trainee position within their organization, such that a person could be there to learn.
Hmm.
Um, because a lot of four-year college does not actually prepare you for the workforce. That was not its intent. And a lot of the people who leave four-year education institutions don't believe that should be the intent, per the discussion on the humanities education that we were talking a while ago.
Yeah.
How do
Yeah.
people actually get trained for their jobs? The answer is mostly not, because companies
Hmm.
don't want to pay to train people because that's a drain on their resources. They would love
Yeah.
other people to train them and then they can just hire them. But that doesn't work at scale. And then there's this apprenticeship slash unpaid internship method that has had a lot of discussion and pushback on, which is, yes, you can do that, and that's a way to get training, but that basically only allows people who can take an unpaid or
Yeah.
underpaid job to do it, which is very much a biased set of people. Because,
Yeah.
yeah, like you can go do your whatever unpaid congressional internship or
Hmm.
etc., and then get your cool job after that 9 months of work or whatever. But you can only do that if you have a family that's just like, yes, I will just pay for you to go
Right.
not make any money for 9 months in DC.
Yeah. Or,
Like,
or you have somehow amassed enough savings that you can, yeah, like
yeah.
not get paid for
Um,
9 months, which is hard.
so yeah,
Yeah.
I think that feels like a good
Hmm.
approach that I think we need, like, regardless of anything else, since it is in the regardless of anything else category,
Yeah.
which is we need some better mechanism to train people for jobs.
Yeah. Which is also like it's the only thing that really like disincentivizes people like companies from training employees is not necessarily the value that they get from having the employee be trained, it's the potential of the employee leaving. They do actually have done studies that like, yeah, if you train your employees, it's a very good return on investment because your employees tend to be better at the things you are training them on. But like, yeah, you lose your investment if you lose the employee. And so and because employees aren't fixed resources, they can in fact go and work other places.
Yeah. So that actually, our comments do lead into number 2 here, which I wasn't going to talk about, but since we were touching on it already, the argument is that the U.S. tax code creates a bias favoring physical capital investment over human capital
Mm-hmm.
investment, because they can immediately expense AI systems through bonus depreciation, yet face numerous restrictions when deducting worker training costs. So she proposes some reforms to the Internal Revenue Code to restructure the tax structure on that to
Mm-hmm.
reduce the cost of training people.
Yeah, basically subsidize, yeah,
Yeah,
which
and like,
makes a lot of sense.
because right, yeah, a lot of the problem is that like it's not worth it for people to invest in their people right now, like,
Mhm,
because a investing in people is expensive and they can't deduct it in the ways that they can some other stuff,
mhm,
and b, the people can just leave and
mhm.
tend to do so if they suddenly have new skills with which they can get a better job elsewhere.
Yeah, yeah, which, like,
um
again, it's like, that's it's such a silly problem to have because it's like, well, if train this employee, they can go and get paid more somewhere else doing, a better job, but it's like but also it's like, but I could pay them more and they would stay here and then I would get my return on investment and I wouldn't have to train a new employee. And it's like it's so weird that doesn't seem to compute for so many like people's corporate strategies. You can encourage your
yes.
employees to stay. Encouraging your employees to stick around will pay dividends because it is in fact valuable to have tenured employees.
Yeah, I
Mm,
think, having looked at a bunch of this,
mhm.
it's hard to measure, that is the
Yeah,
problem.
yeah, that's the problem is that like you can't like in
Like,
accounting perspective, it's really hard to like acidify, like your
Yeah,
employee knowledge and stuff like that. So
exactly. Like
it's
if you're looking at like the balance sheet, it's like, okay, I
yeah,
spent blah amount of money investing in this person's education, and then I had to invest even more money raising their salary.
right, because I've been trained them. Hmm.
Yeah, and you don't have the baseline to compare against, so you don't know how much more productivity that you're getting out of them because of that training. So
Hmm.
you just invested a bunch more, and you kind of have to like believe that that was better, and like
Yeah.
it is so long term that it's hard to do like A/B tests on it or something like that because you would have to like measure the value that you're getting over these people over like the years that
Hmm.
you have them employed or not after
Yeah.
that, and like those are just like hard and expensive experiments to do.
Yeah, but like they're hard and expensive experiments to do, but there are a lot of like, people who study economics and things like this who have in fact done those studies that have proved those things to be true. There is proof out there that this is a good thing to do from a business perspective. But yeah, like our businesses are not really being driven by business models anymore. It's like they're really kind of just
Yeah,
being
or
driven
like
by Mhm.
extremely short-term business models
Right,
is the
right.
problem. So
Yeah.
like yeah, I think going back to some Amazon stuff that we were talking
Mhm.
about, there's the idea of short-term profitability versus like long-term
Mhm.
profitability that we talked about a lot in terms of
Yeah.
like, okay, yes, we could recommend the item that gives us a higher margin this one time, and that would get us more money now, and therefore it would show an experiment that we did that's basically like recommend an equivalent product, but the one that we get a higher profit margin on would show a higher profit for Amazon.
Yeah.
However, if we keep doing that forever, we're going to lose customer trust and people are
Mhm.
not going to trust our recommendations anymore,
Yeah.
which I mean has happened.
Yeah.
These were discussions that we are having in like 2015. Um, uh, but like that's way harder to measure. So like you can't make that argument in like a data driven way to be like, okay, but we can't keep doing that because that's going to hurt our long term
Yeah.
value.
It's yeah, like it's literally being short-sighted. It's just so literally
Yes,
being short-sighted and just like and I feel like that's a problem with a lot of like the economy right now is that our economy is so short-sighted. Like everybody's
yeah.
just like, what's the next quarterly earnings look like? And it's just like,
That will actually be part of our topic in our third section,
oh
so we can
yay,
talk a little bit
cool.
more about that
Yeah.
later. So jumping ahead a little bit
Mhm.
to number 5. Several economists are exploring how the trade adjustment assistance model, in which affected workers are given opportunities to obtain new skills or receive other
Mm.
support, might be adapted for labor market disruptions. This model is apparently one that exists already,
Mhm.
which is basically if you're in a job category that the government designates as an affected area and you get laid off and you
Yeah.
like have to actually reskill because your industry is going away.
Yeah.
There are some like not only like assistance programs to help you get job reskilling, but also just like grants
Mhm.
and things like that.
Yeah, and I would say definitely like like because like being someone who is currently unemployed and has kind of like gone through that thing, it's the way that the government currently handles like the job market and unemployment is just like so woefully out of date
Hmm.
that it's like yeah, like this could be useful, but like that would require a decently significant government investment in like updating those systems. Straight up, when I was like filing for unemployment, I had like put in my job title and they don't have product manager in there. Like it's just not there. Like project manager, program manager, none of them are really like in the system. And so it's
Yeah.
like yeah, like the job codes in that the government recognizes as jobs are just like
Yes.
woefully out
There
of date.
That's a problem with Anthropic's economic index also because as they're
Yeah.
categorizing things into job roles, they also use that same set of like job
Hmm.
roles.
Yeah,
Um
which is just so out of date. But like it does seem like it's a good like program, but I think yeah, it would require like a level of investment to update it and to like keep it from because the thing is also a lot of economic indicators are lagging indicators. Usually you don't know that a recession is happening until you are in the recession because a
yeah.
lot of like your indicators of like cost of living, inflation and things like that um aren't like real time indicators or stuff that like you have to it's like you get the data from like last quarter or last year and
Hmm.
then you analyze it and then you're able to say okay this is like the trend and this is the direction things are moving in um but yeah so it's like I deeply do agree this is a good thing to do but it's like there's a lot of groundwork there that would need to be done in terms of like updating that system to be reduce that lag on the
Hmm.
indicator of it. Otherwise, it's like, oh yeah, like your career field is shrinking because of AI, and so you get laid off, but the system isn't going to
Yeah.
acknowledge that your field is shrinking for another year. And so, like, what benefit does that do you when you are currently unemployed and looking for a job in a shrinking industry?
Yes.
Yeah. So,
Yeah, like to give some personal anecdote on that, I obviously look at all of the job market things for software engineers, and people are still debating on whether is affecting the software engineering job market.
mhm.
Like it's definitely tighter, but some of that is other economic factors.
Yeah, like the job market
Um,
in general is very tight right now.
and
So,
so there's like some data either way, and some people are like, no, 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 it's not affecting like entry level software engineering jobs yet. And I would argue that is absolutely untrue
mhm,
because, like, as a person who's on the edge of it, I have literally been making the decisions that cut down on software engineering jobs in the sense that's like, okay, for this company, how many people do we need to have working on it? Like for this new startup, we're building out our like operating model to go show to investors. How many engineers do we put it in? And the answer is we have AI tools now. I can do it basically all myself for a very early stage company. So where
mhm,
normally that answer would have been like 6 or 7, now the answer is like 2 or 3. That is happening everywhere, I'm sure, because that's
mhm.
just factually true. Probably more or less in different places. I think startups are definitely on the edge of it because
Yeah. Well, because 'cause they're
they're
startups, you know?
startups. They have they have pretty lean budgets and they can start from nothing. So they are like building all of their policies from scratch versus having to be like, well, we seem to have 50,000 software engineers. What if we only need 5,000 of them? Like that's going to be rough.
Yeah,
So
yeah.
but like I do think that that's already happening to some extent, and like, many of the big companies haven't said that. Even like Amazon has said that, Meta has said
Mhm.
that, Microsoft has said that, have said like we are going to have to restructure our workforce for AI, and that is the reason for some of these layoffs. They haven't said exactly that, but like they have said they need to restructure their workforce for AI, which I think is
Yeah,
just like transparently true because all of the work processes change with AI, and you don't need exactly the same set of job roles anymore,
yeah,
which means that some people are going to get laid off and some other people are going to get hired. You can't directly transfer some of those job roles.
right.
So bringing it back to the point, yes, I think anything that is
Mhm,
trying to actually identify, yes, your job is affected by AI job loss is clearly going to be a lagging indicator because it
mhm.
is demonstrably a lagging indicator at this moment. So,
Yeah, yeah. Which is, again, it's like, it's not to, like, poo-poo the idea. I think it's a great idea. Honestly, like, kind of just scrolling through this, some of it I'm like, "This is very optimistic," because it's like, I'm just looking at, like, "Ah, yes, close corporate tax loopholes," and it's like, "Boy, wouldn't I love that?" You know? It's like, reforming tax
mhm,
incentives for worker retention and training. It's like, yeah, that'd be great, but it's like, this is the good idea thing to do, and will it actually get done? But it is at least, like, it's heartening that there is an AI company that is very invested in making these kind of recommendations and acknowledging
yeah,
the shit show that we're in to an extent, and also, like, acknowledging that there is, like, this outsized economic impact that is potential for AI to have, and what do you kind of what do you do about it? Which is nice. It'd be nice
yeah.
if Anthropic came out and acknowledged that AI was a bubble. That'd be really cool. But it's like, I doubt they're going to do that because it does kind of fly counter to, um, their own best interests. But also, I feel like it would get them a
Okay.
lot of credibility, you know?
Yeah. So a couple points there.
Mhm.
One, these aren't necessarily Anthropic's recommended policies. They're just
True.
sort of collecting policies that people have proposed. And in fact, they explicitly say these are not like Anthropic's positions. They're just like some policies that people have proposed that we think are useful to share and get
Yeah.
people discussing more,
Mhm.
which is good. But also, they do have some lines in here, like for the next one that we are going to talk about, which is implement taxes on compute or token generation, which is basically
Mm.
like figure out how to tax compute in a way that gets money from these AI companies. And then they do say in this article, speaking as Anthropic, quote, we believe taxes in this broader category deserve serious study, even though they would directly impact Anthropic's revenue and profitability. These taxes could provide
Yay.
crucial revenue for vital fiscal programs, including several others discussed in this post. So,
That's real good. I'm very proud of them. It's been a minute since I feel like I've ever seen a company be like, "Hey, this would hurt our bottom line, but it's the right thing to do."
yeah.
Like,
And Dario Amodei, who is the CEO of Anthropic, did have a
mhm,
quote along those lines a while ago too, where he was giving an interview that was basically like we're going to kill 50% of jobs and we need to do something about it, like
Yeah.
alarmist thing, but also saying we probably need to tax AI companies. That's not good for me personally. I'm running an AI company, but it's like probably necessary.
Yeah.
So that I
That's
think
good.
is very, very respectable. So
Yeah, yeah. It's like honestly, like anytime we talk about Anthropic on this, I'm just like, you know what? I want them to succeed. I really don't want anybody else to succeed. But if Anthropic comes out on top here, I'd be okay with that. You know, it's like
yeah, I mean, there are reasons that I use Claude all the time.
Mhm.
Part of some of the other reasons are that it's the best at coding, but um,
I'm unsurprised by that, honestly, because it seems like they've actually got because yeah, it's like the fact that Anthropic has not put out like, you know, slop machines like image generators and video generators. It seems like they are like in a more like intentional way thinking about the business model of what they build.
mhm.
You know, it's like it seems like they are doing a bit of a better job of like, okay, let's make sure that we are building products that are useful, that can be used, and that like people would be willing to pay for in an amount that like, you know, covers the cost of us doing it. So it's like, yeah, even though I think they're probably still a little bubbly, but you know, it's like they're the least bubbly of the ones.
Yeah, there's definitely, this is not on topic, but been a backlash against Anthropic lately because they've been tightening their usage limits on some of their tools. Anthropic has very similar to ChatGPT. You can use it
Yeah,
for free and have a very limited amount, or you can like pay your $20 a month for the pro version, or
yeah,
you can pay $100 a month for the max version with higher limits, or the $200 a month for the even more max. And I am paying $100 a month because I use it enough for Claude Code to be worth it.
yeah.
But I have definitely hit my 5-hour usage limits using Claude Code, paying $100 a month for it. And I've shifted that and have been trying to like optimize token costs because like
Yeah.
the $100 a month that I'm paying is actually not paying their costs for my usage, I'm pretty sure.
Yeah.
So, so they're having to work on that, and people are not really happy about their usage being restricted even more when they're
Mm.
paying that much money. But it's like, I don't know. I mean, I would rather them come up with a sustainable business model. So,
Yeah. Yeah, it's like, well, guess what? It costs that much to do the thing you're trying to do. It's like just because everybody else is lying to you about how much it costs doesn't mean it doesn't cost that much, you know? It's like, yeah, it's like you're being subsidized by investors and every other AI company.
yeah, I'm sure Anthropic is still subsidized by investors substantially, but they're trying to move more towards like a sustainable level.
Right, right, right.
Um,
And it's like, yeah, this is the thing. It's like, was it's not like a Tumblr post, which is like, again, but it this little rant about how like there are ads on everything and how it's like this constant kind of like deluge of like people trying to get you to buy things and what have you. And it is basically one of those things where it's like, I'm like, look, like, it sucks, but we're in this place where it's like, how else do you make money? The only other way is by making these things kind of like subscription services. I think I think that's one of the pitfalls of the internet in a way is that like the costs are kind of invisible. Like the resources are kind of invisible for what it costs to make an internet site to a lot of
yes.
people. And so a lot of people think it's just like, oh, it's just a web page. And it's like,
Yeah.
no, it's like that costs money. So in order to like make back any kind of return on investment like that, I feel like we are kind of locked into this place where it's like you either sell a product, you sell a subscription which gives you access to the site, or you sell space on the site to advertisers. And I feel like we are kind of just locked into that place where I don't think there's any other options that are really available for monetizing these sort of platforms, these sort of internet services. I think about people complaining about Tumblr having ads, and it's just like, do you want to continue using Tumblr?
Yes.
Because if you want to continue using Tumblr, it needs to have ads. I worked at AWS in billing. I know how much money it costs to run Tumblr. It's a
Yes.
lot. Like,
I was going to say, and that's just the infrastructure, let alone the people like working on it, which salaries are also very expensive. So
yeah, that it's a lot. And it's like,
yes.
and it's like same thing for like Reddit. I've seen Reddit's infrastructure bill. It's also a lot. And it's like, and so it's like, how else do you expect to like, it's just, it's kind of like,
Yeah, it's like
in
you're
a weird
getting
way,
a service from this
yeah.
that costs them money to provide
Hmm.
to you. How much money have you paid for it? In many cases, $0. Like,
Right.
what are you
Yeah.
expecting here? Like,
It's like, how do you expect the internet to exist if you poo-poo subscription models, you poo-poo paywalls and you poo-poo advertisements, and it's just like there is no other path forward, really. And it's like, and it's like,
Yeah.
and I hate this too. I wish there was another option, but yeah, there isn't really. And so to bring it back around, like people on Anthropic and Claude being like, "Oh, how dare you like limit me for what I can use?" It's like that's the cost of what you're using. It's
Yes.
like I think like this is also like me like working in AWS billing for so long, the number of times people would come to us and be like, "How are you charging us like this much for like this like RDS instance?" And I'm just like, "That's how much it costs." Like there was like a markup there, but also it's like that's how much it costs to run your data center. This is how much it costs to
Yes.
like build that computer with those component parts and those capabilities and then run it for an hour. It costs a lot, especially in the case of AI when they're running off of like these huge GPU compute units. And it's like,
Yep.
I don't know. I don't even know where this is going. I've just kind of gotten on a rant about like the monetization of the internet and how like we just really don't have like we're distilling the economy down into like 3 business models and nobody likes any of them from a consumer
Yeah.
perspective.
To bring it back around a little bit, we were talking about taxes on token generation.
Mm-hmm.
And the reason that I'm not sure that that's like the right way to do it is that like
No.
tokens are a representation of the cost, but not like necessarily a representation of the benefit. And that seems like a weird way to do it.
But again, like having worked in AWS billing for such a long time, it's like metered services is how AWS continues to operate, and it's like, and they're doing okay, but also that's because they're providing like a much more like
Yeah.
base level of like they are providing the infrastructure and not like the product built on top of the infrastructure.
Yeah. Also, it would be weird to tax AWS's revenue based on like gigabytes transferred or something like that,
I
which is
mean,
like,
you say that, but any tax on AWS, because of the fact that they are a metered service, is essentially taxing like gigabytes transferred or compute hours used, because that's how they meter their
because that's their
systems.
billing model, but like
Right.
it doesn't necessarily have to be the AI
No.
company's billing model.
No, it
So
doesn't necessarily have to be. But also like I like inherently I don't disagree with it, but that's also because I'm very biased
yeah,
towards metered systems.
yeah. And I mean, I don't feel strongly that it's wrong. It just feels kind of weird.
Mhm.
But people like throw around token tax, a tax on AI generated tokens sold to end users, basically. But yeah, those are the two in the medium category. Touching briefly on the ones in the fast moving scenarios category, include value added tax in the United States, like they
Mm.
have in the EU,
Europe. Yeah.
um, Europe, and create national sovereign wealth funds with stakes in AI, which
Interesting.
Britain has been talking about.
Yeah.
There's a bunch of thoughts of sovereign wealth fund focused on AI that are basically like
Mhm.
premise AI is going to make drastic amounts of wealth creation by making things way more efficient and cool and revolutionizing industries, etc.
Yeah.
We don't want all of that wealth to go to the AI companies. We want to distribute that among people. And therefore, the thought process there is okay, we should give the general public a share in the
Mhm.
value creation of AI specifically, which
Yeah.
is another thing where it's like, I don't know if we need to approach it that way. We could just do something as a more
Yeah.
normal social safety net. But
Yeah.
I want to talk about private versus public markets. And I wanted to start by just asking you what you think your / the general public perception of what a private company versus a public company is.
I mean, like, I feel like I have a somewhat biased opinion on what, or like perspective of what they are, in that, yeah, public companies are those that are traded and investor owned, whereas a private company isn't listed and it generally has, like, still has investors, but, just isn't listed, doesn't have to report on the SEC and all that kind of stuff.
Yes.
Generally, my understanding of it is that.
Yeah. And so that's true. Like the main distinction there is that if you're listed for public trading, you're obligated to do certain disclosures by the
Yeah.
SEC. So what sort of effect do you think that has on companies, and like what sort of companies do you think fall into each category?
Oh, I mean, it's like they're like kind of across the board though, aren't they? Because like Twitter's now private, EA is going private, and there's a lot of
Mhm.
like very large private companies that exist, whereas like a lot of the companies that we tend to think of, like, well, I mean, like case in point, I think like Fortune 500 is only publicly traded companies,
Correct, yes.
because of the fact that it's based on their SEC rankings and stuff like that. So I don't know, like it's like it's an interesting question to ask me as I'm like knee deep in like all of my MBA stuff.
Yes, I was gonna say, like,
It's
pop
like
quiz, but
pop quiz
no.
on private and publicly traded companies. It's like, yeah, because it's like private companies don't necessarily don't like it's not like they don't do like gap accounting practices and stuff like that. It's just that they're not required to, and they're not required to
Yes.
show anybody those numbers. Whereas like public companies have to and must report out on them and things like that.
Yep.
So
Yeah. So that's all true. One thing to note as a person who ran a startup, startups are private, obviously.
yeah.
And one of the big things is to invest in a startup or other privately traded company, you must be an accredited investor. Do you know what an
Mm.
accredited investor is? There are some standards that are set that are have nothing to do with accreditation. Basically, you're an accredited investor if you have $1 million net worth, not including your primary home, or annual income of I think like 400K a year or more, or something like that. Maybe
Mm.
300, maybe more. I forget what. There's a number for like as a household versus individual. I don't remember which
Yeah.
is which, what the numbers are exactly. The idea is behind that is a bar for a sophisticated enough investor that you are able to evaluate the risks of these investments without
Hmm.
having all of the information, basically.
Hmm.
Slash can handle it if you lose all of your money that you invest in it, because um, many of them are just scams, for
Yeah.
example. Like, because if you're a startup or something like that, you don't have to have anything like revenue or like
Hmm.
any real promise that they will get their money back
Hmm.
or any real financial statements to show them or anything. It's basically just whatever diligence they feel like putting into it.
Yeah.
Which is why there's been several controversies about VCs not doing very much diligence on companies that they're investing in, and yet giving them millions of dollars. But because, yes, basically they don't have to disclose anything. If they investors can request it from them and they can give it to them, but it's not required. So there's a big trend lately of complete companies staying private longer. Notably, some of the biggest companies are
Hmm.
still private. OpenAI
Yeah.
is private. Stripe is the other big one that's still private. And SpaceX is the other one that people always talk about in this bucket.
Yeah.
Um, and the answer to why they're still private, despite being super huge companies that are definitely bigger than a lot of the Fortune 500, is that it's kind of a pain to be public and they don't have to. More or less, because
Yeah.
you are subject to quarterly reporting requirements and you are subject to people suing you for securities fraud and you are
Hmm.
subject to a whole bunch of other stuff that's kind of a pain. And
Yeah.
if there are enough private investors that will keep giving you money
You don't
privately,
need to. Yeah.
you don't need to. Why would you want to? Why would you do an IPO? So there's a lot of that going on. And this has been discussed as a problem in a lot of spaces because
Mm.
this means that only these fancy private investors get to invest and get the returns from these big
Yeah.
companies. Like there are tons of people who want to invest in Stripe or OpenAI or SpaceX that just cannot. Like even accredited investors, just because those companies are not offering their stock to just anyone. Because part of it
Yeah.
is also if you are a private company, you don't have to sell your stock to anyone who wants to buy it. You can only
Hmm.
sell it to the people who you want to work with, and you don't have to have activist investors trying to take over your company or anything like that.
Yeah.
Um, so they're basically just working with like these big VC or whatever private funds that will give them money.
Yeah. And
Um,
let them do whatever they
and
want. Yeah.
and so retail, quote unquote, retail investors, which was like anyone who's just like going and investing in their Vanguard or Counter, their Robinhood or whatever, or even
Yeah.
just like 401ks, don't get any of the wealth generated by these companies because they're
Right.
just staying private. So there's been a lot of push to either um, allow more people to invest in private companies, which people have been doing via just like privately held stock marketplaces, or people trying to like do secondary offerings of Stripe stock, which they're technically not allowed to do,
Mm.
um, etc. Or trying to incentivize companies to go public more by making the requirements to be a public company less onerous.
Hmm.
And Trump in particular has been talking about this. And one of the things is not having to do quarterly reporting and doing it
Hmm.
like every half a year or every year or something like that, like decreasing the
Interesting.
frequency of reporting. Um,
Interesting.
Another one that they recently did lately was loosen the restrictions on having mandatory arbitration clause when you're going public, because
Mm,
basically mandatory arbitration is basically saying if you're an investor who's buying stock in the company, if you have a lawsuit, basically you have to take it to private arbitration. You can't sue me.
yeah.
Um, and there were SEC rules against doing that because that restricts investors from doing a whole lot of things that could be very useful, uh, like having class action suits against the company for like doing bad things,
Yeah.
lying to them, or like a whole bunch of other stuff that like is a pain for the companies, but is arguably a defensive for the shareholders slash consumers in
Yeah.
general.
Hmm.
Um, so that's a thing that they did recently that is maybe not necessarily legal in Delaware, which is where most companies are registered. But there's definitely a push there, basically, to loosen the restrictions for public companies or loosen the obligations for public companies such that private companies go public more
Yeah.
often, um, which I think is an interesting
It is
dynamic.
interesting because, like, especially like I don't 100% disagree with it. You know, it's like the arbitration thing. It's like, yeah, no, no, no. Like that's important to allow people to still file class action lawsuits and things like that, and like have like that means of like getting like justice essentially against a
Hmm.
company that might not be doing savory things in its books and what have you. But it's like the lack of quarterly reporting is one that, like, have to our earlier conversation about
Yes.
like how short-sighted and how quarterly driven so many corporate initiatives just seem to be. I'm like, I don't necessarily hate that, you know? Like, okay, it would actually give companies a chance to be a bit more like long-term thinking. They don't have to constantly focus on like the next quarter's results for the investors. But it also is a little bit like, well, but if somebody's cooking the books, that means it's going to take us longer to find it, you know?
Yes.
It
Yeah.
already feels like it takes us too long to kind of like catch people when they're trying to cheat the system. On the one hand, I'm like,
Yeah.
I kind of like this, but on the other hand, I'm like, but bad actors will take advantage of this. But it's like, but does the harm done by bad actors outweigh the potential benefit to encourage companies to have like more long-term planning? You know? And it's like, I can't really answer
Hmm.
that question.
Yeah, I have similar feelings with like what extra aspect to it also. Like
Hmm.
I agree, having been in like companies that did like weekly business reviews or monthly
Yeah.
business reviews, the amount of time that it goes into putting together a business review proportional to the time period that it is reviewing is actually something that you can be very sensitive to, because if you're spending like a day
Yeah.
every week putting together your WBR document, that's like
Mhm.
20% of your time on something that is completely useless. And I'm sure that companies do that for quarterly reports. Public companies spend a lot of time putting those
Oh,
together,
yeah. Yeah,
in
yeah, yeah.
like just in terms of like time expended, not even just um trying to frame their profits around it or like setting up their metrics to look good.
Yeah,
Because there are a
yeah.
lot of things that you can do that way, where it's like
Oh,
you
yeah,
want to
yeah.
get your deals done before the end of the quarter, like just
Yeah,
so you can see that, like that kind of stuff.
yeah.
Um, Such that, like, yeah, I think there's probably every 6 months is better than quarterly. I don't know. Like that seems like a reasonable cadence. I don't see any reason why it needs to be quarterly.
Mhm.
And that could help. But there is a lot of stuff of like, okay, but the restrictions that we have, disclosure requirements, et cetera, that we put on public companies are there for reasons, and allowing
Yeah.
companies to just do whatever they want more, I'm not sure
Mhm.
is the right direction to be taking
No.
it. Which, to go back to the private versus public thing, is a thing that I always like think about when people are like, well, it's like all of these like investors forcing people to have quarterly earnings or whatever. And it's like, that's bad. It's like the public companies and like the stock market and seeing the stock prices move all of the time is like pushing these companies to bad behavior. And it's like,
Mhm.
I mean, yes, probably, but
Yeah.
also there are private companies that aren't getting pushed to do anything and can just do whatever they want and they don't have to tell anyone about it. And I'm not sure that's better.
No, I don't think that's better at all. No, like, because the thing is, like, it's really like the reporting is not the issue. It enables the issue, but I do not think the reporting is like at its core. Like, if you five whys this thing, I don't think that you get down to like, it's like, well, why are people like, really obsessed with quarterly reports? And it's like, well, it's because the investors care about the quarterly earnings, and then you get down the trail of like, it's really the investors. And so it's like, yes, on the one hand, removing that mechanism for them to like have this like sort of information, like they wouldn't have the mechanism to do it anymore, essentially. But that doesn't mean that the thing itself, like that's not the reason why this is a problem, you know? It's like the real kind of like root cause reason, like I mean I haven't really done the exercise truly, but like I feel like the root cause reason is more like investors want to just like are getting greedy pretty much.
Yeah, so this is the other thing that I want to talk about in this section is like when you say investors, who are you
Mhm.
picturing?
Yeah, like BlackRock. Like, because like, yeah, like when I say investors, I'm not talking about like venture capital investors and things like that. I think I'm talking about more like portfolio managers and things like, because again, like this is talking about publicly traded companies. And so it's people who are on the stock market because by and large, I don't believe that except for like day traders and people who do kind of like, Wall Street bets type folk, I don't think that most of your bread and butter people are really closely tracking like quarterly earnings and things like that. I think it is more of people who are like actively kind of playing the stock market game, I would say, is sort of like who I'm lumping into like my umbrella term of investors when I say that kind of thing, because yeah, it's like quite frankly, for the rest of us, the best thing to do is put your money in an index fund and ignore it.
Yeah.
Like, yeah.
Yeah. Well, and most of the stocks of many public companies is just
Mhm.
owned by index funds at this point,
Yeah.
which is a
Yeah.
whole different topic of discussion. Like
Mm.
20% of the company is just owned by index funds that
Yeah.
aren't
Yeah.
doing anything about it, basically. Like
Yeah.
aren't actively managing it in any way, obviously, because they're just an index fund. They're
Right.
invested in the
Right.
index.
Yeah, yeah,
So
which is why like I don't include those in what I consider like investors. But like which is weird though, because it's like when you think about it, then it's like I don't know. I think it's like board people, honestly, like people on the board. But I admit I don't know a lot about this topic
yeah, I mean,
in
I
depth.
didn't either, which is why up front I was like, as I ran my startup, I learned a lot more about things. But it also means that as I have conversations with friends who did not spend 3 years writing a startup, it's like I feel like we are having like entirely different discussions
Mhm.
because investors can mean a lot of different things,
Yeah.
and a lot of people tend to use it as just like the people who push companies to make a profit, and
Mhm.
that is true in some cases, but like who is doing that and why and for what reason can vary a lot.
Yeah. I do feel like it's probably less like I do feel like it's probably less like investors and more like board of directors probably, like because especially like in I don't know. I don't know if private companies have boards. That's a thing that I don't actually know.
They do.
But yeah, yeah. But I think that that's kind of like in terms of direction setting. I feel like those are the folks who are probably more pushing for things to go one way or another. Um,
Yeah. And I mean, many board of directors are not even invested in the company.
yeah.
They try and have independent board members. Like there's a whole thing about OpenAI's board, for example, having to have people who are completely independent of the company
Hmm.
and doing things like that. But yeah, like
Yeah.
there's a lot of optics of it. But yeah, like I feel like I don't really have a take on the fundamental question that you're getting down to, which is like who
Hmm.
is looking at the quarterly reports and making the stock price go up or
Right.
down mostly at a fundamental level, because at some level people are looking at the quarterly reports and being like, well, that's
Hmm.
bad and people are going to sell, so I'm going to sell now because it's going to go down.
Yeah.
And
It
like
it
there's a
it
lot
it
of
is it is it is very much like it is not like a single individual. It is not really a group of individuals per se. And also like I feel like this is one of those things where it's like this is gonna sound really weird, but it's like culture in a way where it's like
Mhm.
not one person defines culture, you know? It's like not one person defines like what it's like we live in Seattle and it's like not one person defines what makes Seattle culture. It's a collective thing of a bunch of people all kind of like doing the same stuff. And I feel like it's very like mob think mentality is I think how the market works in a lot of ways.
the other
Mhm.
the other thing that's a quote is the market is a conversation between four hedge funds. um
Yeah, yeah, hedge funds, that's who I was thinking of too. It's 'cause the thing is, like, when you think about it, like, there are like, for the publicly traded companies, it's like there's those earning calls and the reports and things like that, and who is listening to the earnings calls? Like, that's who I'm like, who is making the decisions and who's listening to the earnings calls? I think it's more often than not, like I said, like, portfolio managers, hedge funds, hedge fund managers, and things like that, and so, like, that's, like, kind of the class of people who I feel are encouraging the company to behave a certain way is a little bit of like a kind of a stretch to say, but it's like but it is very much like um when the stock price goes up, the company valuation goes up, the company like makes more money. Like it doesn't go to the company directly, but by and large, you will have somebody on the board who is probably a large investor in the company. And also a lot of companies put their own stock into like employee 401ks and stuff like
Yeah.
that. And people do have like employees do have purchase options. And so it's like it's incentivized. I don't know. This is a complex thing that I don't have enough fluency in really at this point in time to kind of like give the right commentary I think that I want
Yeah.
to. But the long point that I've meandered back to is like it's not the fault of the quarterly reporting that's causing that. It's who is reacting to those quarterly reports and why are they reacting in that way, and which I think is just kind of the market
Yeah.
in a
Like
way.
at this point, it's like people are
Yeah,
reacting in that way because that's the way that they predict everyone is going to react to it because that's the
right.
way that people react to it.
Yeah,
Like,
it's very group thinky. Yeah.
yeah. The other thing that I wanted to say is like there's apparently a sentiment among a certain set of people, like or like entities who are invested in both private and public things, that they like the private ones better because they feel less volatile. And like
Mm,
they're not actually less volatile, or like we don't know. It's just that private
yeah.
investments are not repriced on a minute to minute to basis the way that
Right,
like a
right.
publicly traded stock is, where it could like wildly go up and down. Like they're
Yeah.
only priced when they do an offering. OpenAI's valuation right now is 500 billion because that's the price at which they last sold stock.
Mhm.
And it's not going to move from that until they do another like offering, either like
Yeah.
a tender offering for employees or they raise more money, because it's private and people are not trading it the rest of the time.
Yeah.
So like
Yeah.
maybe it should have gone wildly up and down with all of the bullshit that Sam Altman has said over the last 2 weeks,
But we won't
but it
know.
doesn't because
Yeah.
it doesn't because people are not allowed to react to that in a way that changes the stock price. So like
Mm.
there's some mechanism of it that is just like the lack of ability to respond to it
Yeah.
is doing something for them, which I don't know what
Mhm.
that means.
Yeah. Yeah. Yeah, and, like, I would agree with all that. Yeah, and, like, again, like, to the point of, like, companies being driven on short-term gains and short-term, like, performance measures, I feel like the way to properly disincentivize that behavior is to disincentivize the people who profit off of it, you know? Because it's like, I mean, like, if, like, the wild swings that happen when you're announcing your earnings and what have you, people are making money off of that, and so as a company, you're weirdly being incentivized to, like, drive more profit. It's the investor's outlook. And
Hmm.
that's why I use the term investor because that is a thing in
Yeah.
like the stock market trading and in like our current economy is that like for each company it's basically just that guessing game of we think you're going to make this much. And if you underperform it, even if you are making money, if you underperform it, it's like, oh, that's terrible. And it's like, who writes that number? I think that's kind of like where the
Yeah.
problem lies is in that speculation on the market, people trying to just make these assessments of how companies are going to behave and
Yeah.
companies then like feeling like obligations to measure up to them because they're obligated to their shareholders and stuff
Yeah,
like
the
that.
Money Stuff podcast had a mailbag episode where someone asked a question around this, and the question
Mhm.
was like, I don't remember what company it was, but it's like they missed the analyst targets, and therefore the
Yeah,
stock
yeah.
went down, but they still like made
Right.
money. They just didn't like grow as much as the analysts predicted. And why are people blaming the company for that instead of blaming the analyst for having a
Mhm.
wrong estimate? And Matt Levine was like, well, the company should be managing their analysts' expectations, basically. So they should be communicating with them and being like, "This is what we think we're going to do," and
Mhm.
basically, like they're not just guessing wildly. They should be making statements based on the information that is provided to them by the company. So,
Which I don't know if I 100% agree with that. Because it's like I don't know. I've been in conversations at certain companies that I've worked for where they'll set financial goals for the year and it's like, what numbers was that based on? It's
yeah,
like, how did you arrive at that conclusion? Because, like, in my opinion, that's a crazy conclusion to come to. That's backed by no
yes,
data and no evidence. And it's like, and there's no way you can hit those numbers. But that's the data you're providing to analysts. And it's like, there's something in there that is incentivizing these people to basically lie and try and look good to the analysts, you're just kind of creating a vicious cycle in a way. Because it's like, well, if it's the company's fault, but like, well, then if the company gives the analysts like the real numbers and the analysts are going to get upset, I don't know.
Hmm.
It's like, it's such a weird web of money is fake, you know? It's like,
Yeah, but and then
yeah,
like private companies are worse because like
yeah, yeah,
they don't have analysts analyzing like public earnings reports. You have like
no,
investors that you can go to and you can just lie to, or
yeah,
I was gonna say not necessarily lie. In some cases, necessarily lie. There's a spectrum there because it's like it's
yeah,
sort of expected if you're a startup pitching your company that you will give a sort of wild vision because
yeah,
that's the goal. And if you're like extremely grounded and realistic, no one is going to give you money because you need to show
yeah,
them that you are thinking big enough.
mhm,
But then at some point it crosses the line into like you're literally just talking bullshit, like Sam Bankman
mhm,
Fried talking about rebuilding the entire economy with crypto. And then there's straight up lying, like the
mhm.
whole thing with Frank, which was the company that just completely lied about their number of customers that they had and faked a bunch of email lists. Um, fully
uh,
just fake.
fully
So
just
like
fake,
there's
yeah. I mean,
yeah,
lying about the number of customers you have, I mean, like, there are very large companies that have done that, so it's, like, not like it's unique to your small little private companies, but,
yeah,
um
no. And so like that's why it's like, well, I'm not sure also the reporting requirements are the culprit here because
mhm,
the reporting requirements require them to actually like disclose a certain set of actual real information, and also allow people to sue them if that information is incorrect.
yeah,
Whereas in private markets, people are still looking for the same signals. They're
yeah.
just not required to see the same information.
Yeah.
Um,
Well, and also like the was it the public reporting requirements like for the SEC, like it's not exhaustive. It's you're not required to report on a lot of things that
mhm,
like you feel like you should be have to report on those things. Like I kind of go back to Enron every so often because it's like they were cooking their books in there by failing to report interest liabilities correctly. Yeah, it's like certain things have to be reported, but like not everything gets reported in the same way, and it is actually, surprise surprise, not super difficult to, collude with somebody and hide things in your books. And
yeah.
and so yeah, so it's like you can still lie as a public company. It's just that, the government comes after you when you do it as opposed to, as a private company, I guess your investors come after you for it.
Or your shareholders come
Yeah, your
after you for
shareholders
it.
come after you for it too.
Which can
Yeah.
be anyone. Like anyone can be a shareholder of a public
Yeah,
company is the
yeah.
other thing. But yeah, there's a whole lot of debate in that area around like what
Mhm.
are the requirements for a public company and are they too onerous because people are not becoming public?
Mm.
Should we shift that or should we allow
I
more
feel
people to
like
invest in private companies?
yeah.
And I think the dynamic there is interesting and I think people don't like to your point of you don't really have a good understanding of this. I think most people don't have a good
Oh, I
understanding of
would
this,
agree. Yeah.
which is unfortunate because I do think it's like a pretty important dynamic in just
Yeah.
like the economy and the world right now.
Yeah. It's one of those things where it's like kind of to the point of like Wall Street bets on Reddit. It's one of these things that is, in a certain extent, kind of rarefied, where it's like, I don't think that people who have a good understanding of it want other people to have a good understanding of it, because the more people who have a good understanding of it, like, the less they are able to kind of take advantage and,
Hmm.
like, make profit for themselves in that way. So it's like, it's this weird, arcane, maze of fake money that's been created, and
Yeah.
nobody who is in on the fake money maze secrets wants to tell you the fake money maze secrets because that will make them less fake money. So it's
On,
kind of just yeah.
on that topic, another anecdote about investors.
Mhm.
One of the things that I think is interesting that Matt Levine tells us an anecdote a couple of times is that like there's retail investors, which is just like a normal
Yeah.
person that is going to buy stock and stuff like that. And then there's like big institutions like hedge funds or whatever else who's trading stocks. And if you are someone who's running an exchange or like someone who's a market maker who's like buying and selling stocks,
Mhm.
you want to deal with the retail investors because they're worse at it.
Yeah.
And therefore, if you're on the other side of the retail trades, you're more likely to make money. And so
Mhm.
there's in fact a thing called payment for order flow, where if you're some a big exchange, you will like pay Robinhood to like send you like trade requests from their consumers, because you know that those consumers are going to be worse at trading and not pricing things correctly. So like there's even within the dynamic of like people who are trading stocks on the stock market, which yes, like most normal people aren't.
Mhm.
So like the point there is, yes, people want people trading stocks who don't know what they're doing.
Yeah. Yeah.
And they enjoy the fact that there are people who will buy stocks for what they don't think the correct price is,
Right.
because that's how they make money. So
Yeah, exactly. It's like you buy low, you sell high, and if nobody's going to buy it, like no one's going to sell it to you when it's low and buy it from you when it's high, it doesn't work, you know?
yeah.
So, it's just like what is it? Those the whatchamacallit, the betting markets all over again. Like
Yes, I was going to say, Matt Levine was also spent a lot of time talking about this on prediction markets, because there is,
Mhm.
this is also off topic, but an update from our previous topic. Someone won $50,000 betting on the Nobel Prize winner
Oh
on
wow.
Polymarket recently, and because it was a big enough market that they made the money, and they again had accusations of insider trading because it happened like an hour and a half before the results were actually announced publicly, and so there was like the Nobel committee was like, we'll look into whether it was someone inside. But it sounds like there was an interview by someone who claimed to be the person who did it, who was
Mhm.
just like scraping their WordPress site and noticed that they had like set up their blog posts in draft form ahead of time, and it had some images of the person who won it, for
Yep.
example, so
Mhm.
that they could access ahead of time. And so they just did that, and then they bought a whole bunch of contracts on Polymarket, and they made $50,000.
No, there you
Um,
go. I mean, that doesn't seem like insider trading to me.
yeah, it's not. It's not. But yeah, the point there being, that's a big market. But a lot of the problem with the prediction markets is if you're a person who knows a lot about a
Mhm.
random topic that you're supposedly trading on, you need other people who don't know anything about it to
Right.
be trading on the other side in order to
Yep.
make money. And most people are not really excited about trading on random topics that they don't know anything about, versus
Yeah.
even like stocks or sports betting, which
Yeah.
people love to not know anything about and trade. So, because it's fun. Anyway, I think that's a good place to wrap up, probably. Thank you for listening to the Fast and Broken podcast. I'm Carly Rector. If you'd like to support my work, subscribe to my newsletter at carlyrector.substack.com.
And I've been Teresa Kramer. If you want my voice on your products, you can visit my website at teresakramer.com.
And if you enjoyed this podcast, leave us a like or a review. It lets us know people are listening, and it helps more people find the podcast. See you next week.
Bye.